Welcome to the Transparent FX Academy. I'm Nick, and I'm a top author on TradingView with over 190k reputation points. In this video, I will be taking a pair, breaking it down both from an order flow and technical perspective. And by the end of the video, by using the combination of these two different types of analysis, we will try to understand where we have the highest probabilities for the next potential move. And in doing this analysis, I will provide as much free education as possible. So I really suggest that you stick to the video to the end. So without further ado, let's go straight to the charts. In today's video, I want to speak about USDCAD because at the moment we do have quite interesting price action and structure. Starting here on the monthly, in fact, what we can see is that the market at the moment is testing very strong previous monthly resistance, which was resistance here, again here, again here, and again here, which the market broke to the upside with this green candle. And at that point, all that previous resistance was turned here support and demand. And what we could expect is potentially for the market to go and retest this previous resistance turn support and then to reject it to the upside. We can also notice how we have been creating a series of higher lows and at the same time we had equal highs, which classifies as an ascending trend line, an ascending triangle. And when you have an ascending triangle formation, which is something like this, what you expect is a break above the neckline, which is this one here, and then a retest of that previous resistance turn support, and then a rejection higher. So also from a pattern perspective, everything seems very bullish. Now, if we drop down on the weekly, we can see that from a weekly perspective, the market had created this W formation. In fact, I made a full breakdown of USDCAD when the market was here, explaining all the reasons for which we expected a bearish week. And that is what the market gave us. And by the way, I will link in the description this previous analysis, so you can go and check it out for more free education. However, at the moment, as we have actually completed the pattern and as we are testing previous weekly resistance turn support, we could expect a rejection to the upside for the completion of this weekly impulse correction and impulse pattern to the upside, and for the market to also reject the monthly support that we have already identified. Now, if we drop down on the daily time frame, what do we see? Now, from a daily perspective, we can notice that in creating this move to the downside, the market has also created this M pattern. And in general, after the creation of an M pattern, what you expect is for the market to create a move to the upside to go and complete the pattern at the previous support turned resistance. So here on the daily, we could expect a potential rejection to the upside for the market to complete the pattern at the previous support turned resistance. Now, if we go and see what we have when it comes to the commitment of traders, so the COT data, which is what the non-commercials, so the biggest speculators in the market are doing, and we check the data specifically for the CAD, we can see how with the last reports, we went from having 26.8k net positions down to having 17.9k net positions with 4.7k shorts added to the last report and 1.5k longs getting closed. This is quite bullish for USDCAD because a weakening CAD makes USDCAD stronger. And that is exactly what we would like to see. We would like to see a weakening CAD in order to create this rejection to the upside. And seeing that from an institutional perspective, we are actually seeing shorts getting increased and longs getting decreased, that is a good sign. So there is definitely the potential for this rejection to the upside. So how we could be approaching this potential longing opportunity? Now, as usual, trading is reactive and not predictive. The monthly, weekly, and daily combined with the COT data, those are the best time frames from a directional perspective. However, when it comes to confirmations and entries, the best time frames are the intraday time frames, so 4 hour and lower. Therefore, what we could be doing is monitoring price action from an intraday perspective during this move to the downside, waiting for the market to shift from an intraday bearish market as we would have to an intraday bullish market. And if the market would shift from an intraday bearish to bullish market and provide to us one of our valid entries at that point, we could be looking for a potential rejection to the upside for the market to complete this and pattern at the neckline. Now, if you don't know what I'm speaking about when I say valid entries and this kind of things, that is all part of the mentorship program, which you can find at transparentfxtrading.com. Here you will have the possibility to gain access to my entire course with also all the rules of the strategies. You also have the possibility to access one-on-one private mentoring, the VIP market breakdowns with the Telegram signals, the CO2 data software, which is the one that we use precisely in this analysis, the trading station software, which puts together everything that you need as a trader all in one interface. And if you scroll lower past the testimonials, you will see that here I'm currently running a special promotion in which you have the possibility to gain access to the mentorship program for 97 euros. And since I have partnered with the forex broker Blueberry Markets, if you open an account with them from the student dashboard, you can get a full refund credited back in your trading account. And if you scroll lower, you will see that here you have the possibility to join and gain automatically access with the email and password that you will create during the checkout. So definitely looking forward to have you on board. If you enjoyed the video, make sure that you smash that like button and comment below. It really does support the creation of more free education and analysis for all of you. And I will see you in my next video.